Welcome to Gen Z Money, episode 42.
So there's nothing wrong with profit, but we do have a responsibility to the community to educate them. Mm-hmm. So for instance, as home values begin to rise, property taxes can slowly rise to 10-12%. So you want to, at least provide some type of education for your community on, okay, your property taxes were $500 this year. They're probably going to be $600, maybe $650 this coming year. Mm-hmm. So you need to set aside probably an extra $10-12 every month to do that. Even if my jokes aren't funny, my tongue tied up on it, and I don't need to speak a single word, 'cause you got me
What's going on, guys? Welcome back to the Gen Z Money Podcast, where we turn financial peace to your reality. I'm your host, James Bowman, and today I bring back on Courtney and Darius, Pettway Finances, the kidvestors themselves. And this time, instead of talking about kidvestors, we dive deep into their financial story. We talk about how they got started in their real estate journey, how they're going about continuing. They give such amazing tips on what private money is and how to get it. I mean, listen, y'all know I love me some real estate, right? So they deep dive into how they got started. And I always say, man, I love seeing people that look like me doing the things that I want to be doing. And this is a prime example of it. So with that being said, guys, pay attention. Take notes. They are putting y'all on game. If you have no money, if you have low credit, if you have all of these obstacles in the way, this is the episode you need to listen to. So let's jump right into the interview. Courtney, Darius, welcome back to the Gen Z Money Podcast for the second time. How are you guys doing on this evening?
Good. How are you doing?
Yeah, really well.
I am phenomenal. I am so glad to have you guys back, especially after our first conversation where, we talked mainly about kidvestors and that movement there. And you guys have been making amazing strides. Congratulations on the contest you guys won. I saw that.
Thank you.
Absolutely phenomenal. I just love what you guys are doing, and it's very inspirational. But this time to have you guys back, I don't want to talk about kidvestors. I want to talk about Courtney and Darius, because I think that story and that journey is absolutely deserves an episode on its own. So I really appreciate you guys coming back and sharing that.
No problem.
Yeah, no problem. More than happy to delve into that.
I'll let you kick it off.
So, and then for those who did not hear their first episode, they were on episode 20. So if you guys haven't heard that, make sure you guys go listen to that episode before this one, because we might reference back to that. But without further ado, Darius, Courtney, let's start with, normally I like to take it back to the childhood, and we kind of talked about that last episode. So let's talk about, let's start where you guys found out, like, okay, we need to become investors. We need to get into this other space that people of color just haven't explored to its full potential yet. So were you guys together when you guys discovered that? Were you guys separate? How did that begin?
So we were already married when we started investing in real estate. I would say the light bulb of us just needing to invest in general, I think probably started when we were married too. Mm-hmm. We got married, what most might think were relatively young. I was 25. Well, we dated at like I was 21.
Wow, we dated forever. It wasn't good.
So we dated for like 2 or 3 years, engaged for 1, and got married. And of course, we were working regular jobs, weren't high paying, but we made a decent amount between both of us. But of course, we wanted more. We kind of got tired of that rat race life relatively quickly. And, we were just looking for alternatives while still working. We were trying to figure out how we could buy back more of our time. My husband, he primarily came up here for seminary school, wanting to pastor, serve the community, things like that. And I'll let him talk more about that.
Yeah. So
Yeah, let's talk about it, Darius.
yeah, like most community leaders don't make anything. So I was trying to figure out a way to earn passive income. And there's a dilapidated home like right next door to where we were staying at the time. And I remember looking at the property like I go and look at it every day. And then one day I finally got up the courage to tell her, hey, we should try and, get this property. Now at the time, she was like, no, because, one of her coworkers actually had an investment property and was telling her horror stories. So initially she was like, no. What happened was we decided to go like the education route. So we went to an overly priced seminar and we paid money. And although it was overly priced,
we made that back a lot.
We made that back like a lot.
So was it overly priced then if you made more than what you spent?
Yeah, heck yeah.
Well, yeah.
That's why our mantra to this day, like we do, we give a lot of free game.
Yeah.
Right. Yeah. I'll just leave it at that. I won't give any program names or anything like that. Yeah.
Courtney makes a great point. It's like, if you made the money back, was it overpriced? And then the first thing that came to my mind was like college education.
Right.
So, that's something people invest in. And although they make the money back, it's still, you know what I'm saying?
Still
a little up there. Yeah. So that's the first thing that came to my head.
It's still a good price.
So first of all, you mentioned something like you guys were married early. Look, me and my wife got married at 18, 19. Or yeah.
Oh, wow.
18. We got married super early. So I think you guys were right on the ball. I don't think I was too early. I think y'all are doing it awesome.
That's awesome. You don't hear about that often anymore.
Well, we were high school sweethearts. I was in the military, so it kind of all just fell into combobulation that way. But then, so Courtney, I promise you, I'm not trying to, out you, but it's Kidvestors happened to be Darius's idea. And then Darius also has this idea like, okay, hold on, this dilapidated house, like this is an opportunity. Right. And being a pastor, Darius, was there, because, okay, a lot of people think that real estate investors are just evil people who buy houses, they kick out all the residents, they jack up the prices, and they do all these evil things that you hear about in the media. You're a pastor. So was there even any, like, were you battling demons to think like, okay, am I doing the right thing? Am I doing the wrong thing? Or was it like, I know this is the right thing to do because I'm going to make this home something that someone can actually take advantage of?
Certainly the latter. It wasn't even like, oh no, it was simply a matter of, at the time we were in a place called Shelby Park. And at the point that we were there, it was not nice. I always tell the story of when we first began to, flip homes in that area. I told one of my colleagues, and I was like, yeah, it's on Camp Street. And he burst out laughing really loud at work. And he was like, you mean Tramp Street? Because there's a lot of prostitution at the time that occurred on the street. It still does. Nonetheless, I think one good thing that I think good developers and investors have is an eye to see not where something is, but where it will be, right? And so just seeing how, if you look at Shelby Park now, it's like night and day. Banks are building ground up homes there. The only reason why they're doing that is because small businesses or mom and pop construction companies like me and my wife, we started that work. But to answer your question, no, I had no trepidations about it. This is a terrible home. I want to make it look nice. In the process, I'm going to profit. That's not an evil word. And I learned that from a seasoned business owner myself. There's nothing wrong with profit, but we do have a responsibility to the community to educate them. Say, for instance, as home values begin to rise, property taxes can slowly rise to 10, 12%. So you want to at least provide some type of education for your community on, okay, your property taxes were 500 this year. They're probably going to be 600, maybe 650 this coming year.
Mhm.
So you need to set aside probably an extra 10, 12 bucks every month to do that. I don't think that math is mathing, but you guys get where my heart is. But yeah.
No, I mean, it's very important what you just said, because although these expenses are going to increase, but your net worth, the wealth of your family is also going up, and they're not linear. They're exponential. So your net worth might go up $100,000 in home value, and your taxes are going to go up $1,000 a year. So it's like, when you look at it like that, it's not a bad thing. But Courtney, I'm going to bring it to you, because I'm pretty sure I was looking through you guys' Instagram page right now and I could not find it. But you guys definitely made a post about that evil G word.
I was just about to say it.
Gentrification. Okay. I haven't talked about it yet on the podcast, but I think there is no better people to get into the conversation with, especially where Darius just took it, because I'm here for it, right?
Okay.
That is just it's an evil G word, and it needs to be discussed. Why is gentrification a bad thing?
People have made it a bad thing. Because again, when people hear it, all they hear is, property taxes are going up. People are going to get pushed out of their homes. And that is not entirely true. Yes, when you renovate properties, your home values will go up, meaning your property taxes will go up. But like you said, your property values are also increasing your net worth. You have more equity now that you had prior. And there are local programs to even assist people, or those who are affected by their rising property taxes. So they don't just say, your taxes are up, figure it out. There are programs you can apply for to help you if necessary. And on top of that, we always complain about the schools. Guess how schools are primarily funded? Property taxes. So if you have dilapidated homes, drug needles everywhere, boarded up properties, how is that affecting not only your home, but the community at whole? That's also causing a negative domino effect on our schools. So what is the solution? So when people tell me, we shouldn't be renovating these properties, we're pushing people out. What is the solution? What is the solution? Are we just going to keep these properties abandoned? Is that what you want?
Squatters.
You want squatters? You want to continue seeing these dilapidated homes in your community and then wonder why, there's not an investment in the community? So what is the solution? So when people complain, I ask, well, so what do you propose we do? Yeah. And then there's usually crickets.
Yeah. Darius, you want to add anything to that before I jump in? Because I think, yeah.
Yeah, I mean, she's definitely preaching. You can go ahead.
Yeah, well, no, she is preaching. And it's like, I understand. I get that there are concerns, but again, it's I like to relate it, because I always like to relate things to other things just to get people's mind moving. It's kind of what we're talking about with this gentrification topic is kind of like the same conversation we have around taxes. The more money you make, the more you have to pay. The more your home is worth, the more property tax you have to pay. I get it. But we're talking about, gaining $100,000 in equity and having to pay $1,000 more a year, or making an extra $100,000 of income and you have to pay an extra $10,000, $20,000, whatever that tax amount is on that income. So it's like, you cannot ignore the net gain of everything increasing and just look at what you're losing.
Right. And I always say too, I feel especially it's a responsibility to educate people. So not only do we do that through our social media, but even pre-pandemic, we were hosting free meetups to teach people how to invest, like in-person meetups, to teach people how to invest in real estate. So those who, oh, wow, my property's values have gone up. I have this equity now. What can I do to it? Because equity not tapped in is just dead equity. Okay, your net worth went up on paper, but how is that getting you free? How is that helping you get out that situation? How can you leverage it to better your situation and invest yourself? And so I think we have a responsibility to not just better the community through renovation, but education. And then on top of that, even developers and flippers, you can even partner with your local city, your local county. They have programs where they will give developers money to build in certain communities, and you have also responsibility to say, okay, I cannot charge more than X in rent, or I cannot sell this house for more than X amount, so you're not displacing those tenants. So there's a lot of opportunities other than, oh, taxes went up, you're displacing people, y'all are evil. That's not the truth.
Yeah, I think oftentimes people, when they feel like they do not have control over something, it's something that's very hard to fathom. You always want to look for someone to blame. So it's easy to say, Darius, you bought this house, you flipped it, and now my property taxes are going up. You're the evil person. And unfortunately, it's been shown that a lot of times, no matter how much good you do, there are still going to be people that point out the bad.
Yeah.
With that being said, there was a story that kind of relates to this also. It was just a little TikTok story about Hawaii, about how prices are going up, people are being priced out, and it's like a gentrification of the Hawaii, and more homeless people are moving there and things like that. And so again, I just go back to that fact is like, I get it that this can be a problem. Increased property taxes, increased expenses for repairs and things like that. But you're still coming out ahead. You always have to look at the positive.
Right.
So I want to get back to you guys' story. We kind of went on a little goose chase, but I love it. It's a very serious topic that needs to be talked about, especially like gentrification, things like that, because I think that it's a horror story. It's a ghost story to try and sell fear. So Darius, you see this fixer upper and you're like, all right, Courtney, we can do this. We can make this house beautiful. And Courtney's like, not this one, bucko, not this one. And then you decide, okay, we're going to go to a seminar. We're going to get more educated, even if you paid a little bit more for it. Yeah. But obviously something sparked in her at the seminar. So actually, well, Courtney, I can go to you. What was it that sparked you in the seminar that you're like, you know what? He might be on to something here.
So as you can see, our personalities, I'm pretty sure you can tell which one is the risk taker and which one is not. So he's kind of like, let's just do it. And then I'm like, hold up, how are we going to do this? What does this look like? A weakness of mine is that while I like to know details can be a strength of mine, but it can be a weakness because sometimes that keeps me from moving forward if I don't have all the answers. And so that's why I was hesitant, because I was scared. I didn't know how this was going to happen. I thought I was going to end up like my coworker with all these problems. But going to the seminar, seeing professionals who've been in the industry longer than me, who knew what they were talking about, could give me kind of like a plan of action on how to start, from A to Z, what I need to do here, the next and the next and the next. It helped me and it gave me more comfort, and I was more comfortable taking the risk. So the education made me more comfortable taking a calculated risk.
That's I love that, because you're speaking to half the audience. Half of the United States one is a risk taker and one is conservative and more cautious. Yeah. And so you're talking to half the audience with this one. And so it's like, but it's great to hear that although you were very cautious, although you were very detail oriented, you took the education and you said, okay, we're going to try it. A lot of people might get this education and continue educating, and never take that first step. So I'm going to guess, and I could be wrong, that you guys took that first step, right?
So I think we went to the seminar like August, September. I don't even remember. It was sometime in the fall. We had closed on our first property that December.
Boom. So 3 months. So 3 months, y'all are, well, you said September. Yeah. Like 3 months.
September, something like that, yeah.
3 to 4 months. Okay, so let's talk about it. Who wants to, Darius, you want to get into that? How did you find it? What did it look like? How did you talk her into it? I mean, she was like kind of already there, but.
Yeah.
The Blue House.
Yeah. Okay, I was 11/29, right? Yeah. So we were getting a lot of no's, but we had a mentor who was like, get at least 40 no's before you decide to just throw in the towel. When I say no's, I'm talking about the fact that we were coming in this using OPM or other people's money. We had very little capital at the time and things like that. So it was property after property. We were getting no after no. And then finally, we got a yes with the property. Not only did we get a yes with the property from the seller, we got a yes from an angel investor. And so it kind of this perfect timing. So we still don't know who this person is to this day, but they partner with us to this day on projects.
We know them, we just haven't physically met them.
Okay, I was like, you don't even know his name.
We just haven't met them in person.
I apologize, but yeah, I don't know what this guy looks like, what this girl looks like, and yeah, so they ended up, loaning us a huge amount of $170,000. And this was 2017. So the market wasn't so bloated, but that was perfect because we ended up, we did what we needed to do. We got our profit. And then that was kind of the, one of my favorite phrases is, oh, taste and see that the Lord is good. So I felt like, oh, taste and see that real estate may be good. So from there, it became like a domino effect. We began to knock out properties, specifically in the Germantown and Shelby Park area.
And that's not, I'm objective enough to say that is not the case for most people. Most people don't come out the gate with two basically strangers to us at the time, giving no experience, no real estate background people $170,000 to do our first project. Like Darius said, we had very little capital. Our credit was okay, but we didn't have enough to take on that type of project. Obviously, we weren't occupying it, so personal traditional loans were out. Like you can't use FHA and all of that stuff. We didn't quite qualify for conventional. Hard money lenders, for those who don't know, hard money lenders, you usually have to have some type of experience. You have to have at least one or two under your belt. So we couldn't get a yes from them. So really our only option was to get creative, to either wholesale until we stack capital or give it a shot with private money. And so one of the things we learned in the seminar was how to, put together a presentation, sell your knowledge, sell your expertise, even though you didn't have experience, sell them on your due diligence. And I think that's what helped these investors who literally were strangers. They're in California. We've done 3 deals to date with them. Again, we still have not met them in person, but our due diligence and being professional, and just showing that we were still educated, even if we didn't have the physical experience, I think is what helped, gain the trust of getting that lump sum.
And also getting them their money back.
Yeah, that helps too.
At the end of the day.
It's crazy that you have to mention that, but that's a very big portion of it. So, well, Darius, you said, you talked about your mentor giving you the advice, like get 40 no's and then decide whether you're going to continue or not. What are you talking about when you say 40 no's? Are you talking about 40 no's from lenders? Or are you talking about 40 no's from sellers? Or are you talking about just 40 no's altogether? Just in general, you just asking everybody.
I'm at yes. Everybody. Yo, I have this packet. I have this property. We can offer up to this amount interest, annualized interest. If you decide to partner with us, this is a slam dunk deal. And so you get no after no after no. And that's where I think I realized like I was a entrepreneur, because the no's would kind of fuel me. I'm like, okay, all right,
closer to that yes.
Yeah. They can't all say no. So, yeah.
That's a great way to think about it. It's like every no you get is closer to a yes, or at least if you get a maybe, oh my God, I can't even imagine how that would feel like. So you mentioned that, or I think Courtney mentioned this, that you guys didn't have the capital to do this first deal.
No, it was literally $170,000. That was to buy and to renovate.
So what was, and you guys don't have to be very specific, just a general idea, what was your financial position looking like at that time? Were you guys in tons of debt? Were you living on less than you made, already budgeting kind of?
We basically made a decent income and we were saving, but we just didn't have a lot of disposable income.
Yeah, yeah. And
Gotcha.
we were actually in, because we were, I think that was like, we had been married how long? Like
2 years.
2 years. Yeah. So we were just, I feel like getting our leg, yeah, just getting our stride. And then we decided to go into real estate. So yeah.
But I want to emphasize that because a lot of times the reason that people use OPM, other people's money, is because they have none, but they have none due to financial irresponsibility. I'll put it like that. So it doesn't sound like you guys had financial irresponsibility. You were obviously saving at the time. You're living on less than you made. You weren't in hundreds of thousands of dollars in credit card debt. You guys were in maybe not an optimal financial situation, but you guys also were not in a dire situation where you were thirsty and you need to make this deal work. Otherwise, you guys don't eat. So,
right. And I want to say too, like OPM, what we've learned from people who've done way more than us is that they still use OPM. They could have their own capital and they will still, crowdfund or syndicate or angel investors or just borrowing. And so OPM, if done correctly and not over leveraging, can be a powerful tool. And it's subjective because what I might feel is over leveraging for us could be pennies, to someone else. So it's subjective. So that's when you have to know your risk tolerance, what you're capable of, especially if things go south.
Gotcha. And so you guys also talked about building rapport. Darius said, look, I got this packet. I got this deal. I have these comps in the area. I've done my research. And so you're not coming to these people with an idea. You're coming with a business plan, an actual business plan that has a proof of concept because these houses have actually sold in that area. So the concept has already been proven. All you need is the money and you have the drive to make it happen. So you guys aren't coming there empty handed. You're not coming, hey, I need money. Hey, where's the deal at? And you're like, I don't have it yet. So can we just go a little bit? Let's just very, glance over. You don't have to do, say every single thing, but like, what are some of the things that you bring to someone who you would like to?
Yeah. So obviously the address. So you want the address, the current stats, bedroom, bathroom count, square footage, all of that stuff, everything about the property itself. Then of course the demographics.
Yeah. Everything within a 0.6 mile radius. And if you're really good,
0.6?
half mile. I'm sorry, 0.5 mile radius. My bad. Forgive me. I'm here. But everything within a 0.5 mile radius. And if you're really good, you will understand that even though some homes are in that radius, that streets make a difference. So if you're really good, you'll know, okay, this may be within a half mile radius, but this is on X Street. It isn't Y Street, and they have different valuations. So that's just another thing. And probably that's one of the most important things, your comparables, because that's going to let them know the ARV and also going to let them know if you're actually capable of returning their money with interest. Go ahead.
And then also what we plan to do with the property. So usually we're doing some type of renovation. Most of the time we're adding a bedroom or a bathroom or both. We tell them what our exit strategy is. If we're going to flip to sell, we're always flipping. You're just flipping it, renovating it. But are we going to flip to sell it or are we going to flip to hold it? So we always, tell them what we plan to do with the property, because that also gives them an idea of how they're going to get their money back. But I think that's it. Pictures, the existing stats of the property, market demographics, how much it will cost, what our purchase price is, how much we plan to renovate it for. We also throw in those carrying costs, you know, property taxes, insurance, all of those things. And so, yeah, I think that's the gist of what we include.
Gotcha. I think it's super duper important that what you're talking about, like every city I've ever lived in and been to, it has invisible lines. And it's like, you might go to a city and you say, listen, you don't buy anything on the other side of this set of train tracks. You know what I'm saying? Yeah, exactly. And so what you guys are talking about is absolutely real. And it's super duper important to know the market you're investing in, or to be using someone who knows the market you're investing in like the back of their hand, like an agent, family member, etc. I see Courtney's face. She's like,
that's what frustrates me sometimes about wholesalers, and no knock on wholesalers, because we will wholesale occasionally if, you know, there's a deal we don't want. No knock on wholesalers, we use them. Yeah. But there are some out there that don't understand the invisible lines. Some of them don't even have lines at all. Like, they will give us something that's, you know, a mile and a half out, you know, sold 12 months ago or more. Like, or they don't know about the invisible lines. And so, you know, you sometimes I have tried to teach, and then, you know, one, they're like, well, thanks, but I didn't ask you. And then some are a little more receptive. But yeah, it's just those invisible lines really matter.
Okay, so you guys purchased your first property relatively recently. You know, 2017 really wasn't that long ago.
No, it wasn't. It wasn't.
And so you guys didn't get in, you know, during prime time of the crash. I talked to a lot of people who were fortunate enough, and that's when they started. But the mentality is way different. Yeah, exactly. Yeah, I was middle school. So you guys got in relatively recently, and this first deal was a flip, if you said that correctly.
Yes, yeah.
So you guys were able to use other people's a private money lender. You built your rapport. You gathered your comps. You gathered all the information. How did you even get in contact with this person? Did you look on Yellow Pages, or?
It was actually through that overpriced seminar. Like, that's why it's like she said, it may not have been overpriced, because if it were not for that seminar,
we probably wouldn't have gotten.
Yeah, we probably wouldn't have gotten, because, well, we didn't meet them at the seminar. We met somebody who we asked, but their money was tied up at the time, but they recommended us to these Californians, right? So that's what networking does. Like,
Yeah, I'm starting to side with Courtney now, Darius. I don't know if it was overpriced, because the networking aspect that you guys just pointed out is absolutely almost priceless. You know what I mean? Yeah. If you meet someone and you get to know them, and you gain trust for them, they gain trust for you, their network now becomes your network. And now you have credibility just by knowing this person and them trusting you. So that's just crazy how things work out. Like, you didn't even meet this person at the seminar, because you still haven't met this person, but you met someone that they trusted. And that's awesome. So you guys, okay, I assume, I'm gonna assume again, you guys knocked this deal out of the park. It performs at least enough to pay your hard money. Darius, you was looking kind of off. Okay,
I don't know. I don't know. We would have said knocked it out of the park.
I think we
got them their money back.
Yeah, we made like, was it 10?
It was like a little under 10,000.
Yeah.
Obviously, first timers. So we made a lot of mistakes.
Yeah. We made like right under 10. I was just blown away at the process. So, here we are, another dilapidated home. It wasn't as dilapidated, but we still totally reconfigured the home. We brought the kitchen to the front. We added on, to the back of the house. We waterproofed the basement.
Doing too much.
We were doing way too much. But then after all of that, to be able to pay this lender back, and then to make, I just 10,000. I'm like, whoa, this is 10,000. It's like a bonus on top of, we both had jobs at the time. Like, now I have a $10,000 bonus. It's like, let's do this again. Now this time we know the mistakes to look out for. But yeah, it was really cool.
So it was a JV deal. For those who don't know, who might be listening, it's joint venture. So that was kind of had no experience for context. So they weren't comfortable doing like an interest only kind of thing. They wanted, a little more.
Split. So basically they got 10, we got 10.
So we agreed to a 50% profit split. So they fronted all the money, and then we really netted 20. And then, like you said, we got 10 and they got 10 on top of the amount of money that they lended.
So would you guys say, because I heard that there's 3 rules of business. I haven't personally flipped the property yet. I'm not a renovation guy. I haven't gotten into it yet. But there's 3 rules of businesses. It costs twice as much, takes twice as long, and you're not the exception. Are you guys saying that might be somewhat true?
Oh, yeah.
It's true. It's true still now.
Yeah.
It's still always true.
Definitely.
It always takes longer, always costs more.
Yeah.
Gotcha. Courtney, I think you're reading my mail, because that was definitely my next question of how you guys structured the deal with this lender. So you guys did a joint venture where you basically did a profit split, where it was a 50-50 profit split. And so you guys talk about it as if you did not profit as much as you guys projected. Is that correct?
Yes.
Yeah, we're supposed to do like 30 a piece.
Yeah, we were planning on 60 and 30. And that's because we underestimated how much the renovation would cost.
Yes.
And because we underestimated the renovation, we bought too high. So we really, in hindsight, should have bought much lower than what we did.
We bought it at 101.
101, when we probably should have bought it at like 70.
Yeah.
Okay, so talk about how did that affect, well, obviously it didn't affect it too bad, but how did that conversation go with this lender to say, hey, look, you're not going to get the return you were hoping for? How did you guys structure that conversation, and what was the outcome of that?
With the lender, honestly, they were happy for 10 grand in how many months?
It took 8 when it should have took 6.
Yeah. They were. So the cool part about real estate is that you can make a whole lot of money in a short period of time. So frankly, we didn't get any complaints. We just got the thank you for my money. Thank you for the 10 grand, right? And that's it. And when is your next deal? So although we did project, we didn't get any. Yeah, he never said
and
anything.
I think it's too, and this, we also teach other people,
Yeah.
You don't promise them anything. You are doing your due diligence and you are providing estimates, but you also let them know, this may not actually happen. Just being transparent.
Yeah.
You're investing. What we're projecting might not occur. So you're doing your best, but you also let them know the risks. And so, that's just plain and simple. And so, and then from their perspective, think about it. They're a private lender. So they just still got 10 grand for doing absolutely nothing. I don't think any investment gives you $10,000 on your money in 8 months for doing nothing. Like, he is truly earning passive income. He wired us 170, got 10,000 back on top of that in 8 months.
Gotcha.
And so that's how we sell them, is one, the return on the investment that is truly passive, but we also are transparent in saying, we're not promising you anything, but this is what we're projecting and this is what we expect. And so
was this also their first time private lending, or
no?
Did they have experience? Okay.
They actually had experience, and they used their self-directed retirement to do it.
So that's a different level of risk, maybe, right there. I don't know about that one. Okay. Yeah. But I like to hear that it did not, even though they did not get the returns that were projected, it did not completely destroy the relationship. You guys still did your best. You probably communicated very well along the process. You're like, hey, this has come up, so returns are coming down. And although it may be frustrating, I mean, it's the reality of investing. Nobody thought we'd have a year like this year. So I really love how you guys are saying, like, you have to be honest up front that these are not guaranteed returns. Anybody who's going to guarantee you return in investing, it's a scam.
Yeah.
And so you guys weren't cocky about it, saying, look, this deal, you better come get it before it's gone, baby. So I think that is awesome. I love that. You guys are giving the listeners such great
Great
And
choice.
I want to pivot to say that was our first deal. We did joint venture initially. Then as we built up our experience, we were able to say, we don't want to give up 50% of profit. We're starting to, get better at this. And so then that's when we just agreed to APR, like a fixed interest rate. So we would say, hey, we'll pay you initially, just to get that lender, just to get that relationship. The interest rate was a little higher. So we would start off at like 11, 12%. And so we would say, hey, we will give you 11 to 12% on your money in X amount of months. So we should have this project done in like 9 months. So you'll get 8 to 9%. Initially, we were also doing monthly payments. And then as we built more experience, we were like, nope, we're not going to pay you monthly now. You're just going to get the interest at the end. So it was kind of like levels.
Gotcha. So you guys do your first deal. Darius was right. It worked. So where did it go from there? You guys flipped this property, but Courtney, you also mentioned earlier that you guys don't flip and sell every single property. Some you hold, you might refinance, or something like a burr. Yeah. I'm sure you guys know. So what was the strategy going forward? Y'all got this money. It's Darius said it's a bonus. So you did a lot of work for a bonus, man. I tell you that. So where did it go from there?
I think so. The first one was a flip. The second was a flip. Well, we thought it was going to be a flip turn rental. We were second go around. We were too optimistic. Is that the word I'm looking for? On the ARV. So we didn't really get the price that we wanted. So we were like, oh crap. So we ended up holding it. We held it for a year as a rental. Then we sold it again. Because we weren't getting the cash flow we wanted to.
We were just breaking even.
We were just basically. No, I think we made like $100. We made what we're telling other people not to make.
Yeah,
we learned our lesson.
We were scared, silly.
We were like, this ain't enough margin for us to hold on to it. Let us sell it while we can get out, so we don't end up in the negative.
Yeah.
Then we flipped another one. Then we bought a fourplex. So we were just, as deals came, we would just see, okay, is this a flip or is this a rental? Is it a flip or is it a rental? Or hey, we just wholesale this one. So that's kind of how we approach it, just depending on, the return, really.
Gotcha. So let's talk about the second deal. I just want to point out, guys, as we're talking, Darius is spitting out actual street addresses. Yeah, like that's how. No, this is great. That just shows like how much mental capacity is going into this. Like, you remember that blue, like Courtney said, the blue house. He said, "Oh yeah, what 1172." So these are things that you guys are obviously putting a lot of time into to do it right, to perfect your craft. So let's talk about that second one. You mentioned that originally you guys purchased it with the intent to flip it and sell it, but you guys messed up the ARV and running your numbers. Was renting it one of your exit strategies from the get-go, or was this something that you guys discovered after realizing like maybe selling right now isn't the right thing?
The second part.
But man, I find myself kind of being a switch footer.
This
is where the education kind of helped, because the only reason we knew to pivot was because they told us like always be prepared to have multiple exit strategies.
We didn't listen that time though.
Yeah, and so although we didn't expect to have to use it, we still had it in the toolbox because of the overpriced education. So
but yeah, that experience taught us, okay, yeah, it worked out.
Yeah.
But we definitely need to make sure if you can't flip it, you can sell it. Or I'm sorry, if you can't sell it, you can hold it. Yeah. If you can't hold it, you can wholesale it. But you just don't want it to stay on your books, especially if you're losing money. So always buy at a price where you can do multiple things. That's kind of how we operate now.
Gotcha. So would you say, okay, so how do I don't even know how to frame this question. Okay, so you guys have talked about selling and flipping and selling, flipping and holding and wholesaling. You guys kind of just done it all. With the second property, was the reason that you did not sell it because you guys said you were basically breaking even, maybe making a little bit per month. So it obviously wasn't worth holding. What was going through your head with the sunk costs? Is it the sunk cost fallacy, right? Is that, I might be making this up, but it's basically like I put so much time, I put so much money, I put so much energy into this thing. I don't want to lose money on it up front. So was that what was going through your head while you guys decided to rent? Or
I wanted to pay our private lender back.
Yeah.
So this was a new private lender. So this wasn't the same, because I think we bought this property while we were still renovating the first one.
Yeah. And so what happened was when we were paying our other one back on time and stuff, I guess word starts to get around in, rich people circles. So, hey, get that young couple right there. And our main thing, we'll take an L before we let, our investors take an L, right? So that's our main thing. Lord, how are we going to get these people back their money? And thankfully, this one,
he was local this time.
Yeah, he was. Yes,
Dwan. Rest in peace, Dwan.
R.I.P. Dwan. So he was actually local, and because he was local, he actually saw, okay, they're renting it out, and then so he got the majority of the rent. That's why we only
plus because we had to do an extension because we didn't get him his money back when we said we were.
That's how we kept him happy. So when we did the exit strategy where we were going to hold it, we gave him the majority of the rent. To kind of ease his feelings about, okay, we're gonna hold this for a year, but hey, here's, I think it was $1,200 or so. Here's almost $1,200. So we're going to give this to you every month, as a sort of peace offering until we. It wasn't more.
It was a lot, but so our interest rate didn't change. So we had a fixed interest rate, and what happened was basically the rent we were getting. Basically a portion of that was going to our lender essentially. Okay. So like Darius said, that kind of helped.
Yeah. And I just remember being, like so heartbroken, but having to move forward because like Dwan was my guy. And he believed in us like from the very beginning. Even when we first started, he took us out to this restaurant and he just like bought us meals and stuff. And he just made us feel really at home because I had only been in Louisville for like 2 years or so at the time. So with that second deal, A, how do we pay him back? B, okay, we are having to pivot with this exit strategy, but how do we keep him happy in the meantime until we sell this home?
And then he was Black. So I was really excited because he was like the first Black real estate investor we actually kind of met. I take it back, George.
I think we met him before George though.
We did because we met him at the seminar. Yeah, we met him first. But so for him to take us kind of under his wing and then not only mentor us, but also be our private lender and be patient with us as we navigate, oh crap, we messed up. And be patient with us and arrange payments, stuff like that. It was cool. And so we learned new lessons each property.
See, it seems as though that you guys are not playing the short game to make as much profit as you can to retire early. It sounds like you guys are playing the extremely long game. And the reason I say that is because it is obvious that you guys care infinitely more about the relationship, the trust, and the relationship and conserving that than the potential profit that you may be missing out on. Because a lot of people have this misconception, like the reason I want to use other people's money is so if the deal doesn't go bad, then I don't lose all my money. And that is a very, very poor way to operate. And I think that's the fastest way.
Yeah.
And it's false.
Yeah, because you're going to get sued.
People think LLC, let me just tip.
Break it down. Go ahead.
People think LLCs think, oh, if I buy it in my LLC, I have no personal liability. Yes and no. Most of the time when people are buying LLCs, especially if you're not using private money, you are signing what's called a personal guarantee. So even if you default guess who still has to pay that money back? You personally, which means your personal liability, your personal assets could still potentially be seized, although you bought in an LLC. So if you pierce the corporate veil, if you default on payment, if you do anything fraudulent, that LLC goes boop out the window. They don't care. Only rare instances where you don't file a personal guarantee is when that can kind of hold true. So a lot of people hear OPM and like you said, they think, oh, free money. That's not the case at all.
Yeah, I think I appreciate you pointing that out because, and a lot of people, I hate to say it, but even a lot of people, they want to do the LLC thing on their own. They want to structure it on their own. They want to file all documents on their own, and they end up doing it wrong. They end up mixing funds with personal funds and in business funds. And it's very, very easy to pierce the corporate veil in that instance. So it's not a fail safe. And anybody who's looking at using other people's money, you need to, I think the thing that just separates the good investors from the bad is you need to be more afraid to lose someone else's money than you need to be able to lose your own money.
Yes.
Like, I think that's the best thing because, like, I'll lose my money all day. I will buy a deal, it will go south, and I'll lose my own money. All I gotta do is convince the wife that it wasn't my fault. And that's it. If I start losing somebody else's money, now I got to talk to his wife. I got to tell his kids why they ain't got their money back. I'm not doing that. So it's great to see that you guys are spreading the message. Like, yes, using other people's money is fine. That's what rich people do. There's nothing wrong with it, but it needs to be taken extremely serious. Otherwise, you're playing with other people's money. In some cases, you're playing with other people's retirement. You know,
you really are.
And a lot of people throw up their hands and say, hey, it's the risk of being an investor. It's like, no, you're truly, people are putting their life in your hands to try and give you an opportunity while also seizing an opportunity themselves. So
what's funny is that meeting with our second investor, he did bring his wife. I felt we had to convince her.
And she was
more than what he did. She was like, so what happened to this? And what happened to that? And so it's so funny now, though, because we still have a relationship. And although he has unfortunately passed, you know, we went to the funeral and she even reaches out to us and she even wanted to invest with us afterwards. And that we thought that was just kind of so cool that she wanted to do that. But yeah.
Well, I mean, look at it from her shoes. Look at what you guys did in order to preserve that relationship. Like, you guys messed up. You guys were not perfect, and there's nothing wrong with that. And you guys did everything in your power to preserve that relationship, to make things right, to keep things afloat, even if it meant you were losing money. But I think that is the most powerful thing. And so, like, a whole lot of you guys' Instagram and a whole lot of your education is about this topic we're talking about, you know, respecting other people's money, using it wisely, finding the right deals. So it's just great that we could talk about it and, you know, let people know, like, this is an option, but it should not be seen as a less risky option.
Right.
That's good. That's good what you said.
You just summarized it perfectly.
Yeah. So you guys, you flip and sell, flip and hold, wholesale. I mean, and you guys do it all, right? And are you guys just in one market primarily, or you guys nationwide is on your side? Or how are you guys?
I don't even have the mental capacity.
Yeah, it takes a lot.
And we're in construction now.
Yeah. So just our projects taking on clients' projects is just, if I can't be there right now, we don't have the bandwidth to stretch out
right now
that far.
We're growing slowly because the goal is to, of course, grow our team. But until that happens, we are here in Louisville, Kentucky.
But that again, I'm sorry, I don't mean to sound like redundant, but like, this is so great because that's what a lot of beginning investors do. They think, I need to have a team in Dallas. I need to have a team in Jacksonville. I need to have a team in New York. I need to be able to jump on every single opportunity that comes to me nationwide. And I'm like, listen, you need to master your backyard. Learn one market. I invest in one market. I invest in a 10-mile radius. I'm not going outside those 10 miles.
We
And
got our certain zip codes that we kind of
exactly. But I guarantee you know it better than the back of your hand. And I had Tom Brickman, the frugal gay, on episode 34. He talks about he invests in Toledo, Ohio. And we talked about those invisible lines that we talked about earlier, and how all of these investors are flocking to Toledo because they see you can pick up a house for $11,000. Well, you don't realize that that house is never going to appraise over 30,000 because they don't know the market.
Man.
And so
can we talk about that?
Let's
Please
talk about it. Because I mean, look, like,
oh man. So we always say just because a deal is cheap doesn't mean it's good. So even here in Louisville, Kentucky, you have certain areas where you could get houses below 20,000, but they've been below 20,000 for quite a while. And there's a reason for that. And so you have to understand, and then I don't like, this is my personal opinion. I hope I don't get canceled for this. Some investors will buy properties, have no intention of renovating them, holding them, boarding them up in hopes that they will appreciate and sell later. And all you're doing is just harming the community further. And so I have a problem with that. And so that's what, unfortunately, a lot of these investors do, and it does not help. So if you have really no intention of doing something with the property and you haven't done your due diligence, or you haven't teamed up with people in that market to at least help you, don't come over here. That's my little 2 cents.
No, I 100% agree. I think, I mean, I can't wrap my head around how they think that would actually work, but to each his own. I mean, investors do some crazy things, I'll tell you that. But I mean, I like to compare you guys to, like, you know, Chip and Joanna Gaines, where you guys focus on one market. They do Waco, Texas. You guys do Louisville, and that is you guys' market. And you guys are not just gentrifying it, but you're improving the entire community by flipping, selling, renting, and things like that. So it's just awesome. It's really awesome to hear that.
Oh, thank you.
So what is you guys' overall portfolio look like right now? Like, how many flips have you guys done up to this point? How many rentals do you guys have? You don't have to, if you guys don't want to get into it, if it's too personal.
I think we have, I really can't even count. I want to say, as far as flips, we're right around the 20 range. Not a lot, but I feel like that's a lot in the period of time we've been doing it.
Not a lot.
Well, no, it's not a lot. When I compare it, when I hear it to other investors who've done like 100, they're like, oh, I've done 100 flips. I'm like, oh, I haven't nearly touched that. So I think it's a lot for the time frame we've been in, but it's not really a lot. We bought fourplex. We had the rental, we sold it, and then the duplex. What we're really focusing on, and one of our long-term goals, is we're trying to venture into commercial. Our market in Louisville, the median home price is around $225,000 to $250,000. So we've learned in the past, we like to flip single family homes, but we like to hold multifamilies, 3 units or greater, because it's really just hard to get the cash flow and the return you want in our market with just traditional single family homes. Like, you're not going to get that $500, $600, maybe even $800 like net cash flow in a single family home in Louisville. Like, unless it's free and clear, it's like not going to happen. And so we're trying to venture into the commercial space. What's funny is we have the money at our fingertips because we have the network. It's finding the actual property that pencils out and makes sense.
Gotcha. But it doesn't sound like you guys are in a rush. You know, it is the next logical step.
Yeah, no, she ain't in a rush.
I'm in a rush. I'm trying to retire.
we move more so. We aim to operate in wisdom more so than being antsy.
Yeah.
So while we do, strongly have strong desires for commercial properties, we've learned from, we told you about the second property, we've learned about being too optimistic. So if it comes along, it comes. We'll continue to look diligently, but until then, we're not going to reach too hard, because that's when you end up losing your balance and falling over. So yeah,
we're super conservative. We've only put offers on 2 so far. Yeah. One was that one downtown was like a 42 unit,
Yeah,
but
yeah.
they wanted way too much. We shot our shot. Definitely was a low ball offer,
Yeah.
but we were like, hey, whatever, we're gonna try. And then the other one was that was a hotel motel, but it was like all 1-1s.
Yeah.
We were like, we don't like 1-1s, so we were thinking about converting them to like 2-2s.
Mhm.
But it just didn't. We made the offer based on how it would pencil out, and of course they were like, no. So we're trying. Maybe a follow up next year, and we'll have a different answer for you.
All right, so Darius, you mentioned that either you were a pastor or you are still a pastor.
Yes, yes. So yeah, I'm in ministry now at my local church here at Sojourn Midtown, and I get to lead my community group as well as be a part of initiatives through the local church, and just grateful to serve my community in a way that I think is best. So yeah.
Gotcha. And so I'm gonna assume that the education that you guys are putting out, especially on your Instagram, is a positive part of serving the community, teaching others. Have you tried to use that in ministry? Help people purchase homes, or even give them inspiration to say, hey, look, you might be able to go out and purchase a home that might be a little dilapidated, but this can really help you build your net worth and create generational wealth? Or are you kind of keeping those separate? Or what is your philosophy on that? And if it's too personal, you can let me know.
Yeah, no, you're okay. I just I'm more of an open book, and I have an open door policy regarding stuff like that. So but at the same time, I don't give unsolicited advice. So if you come to me with questions, I'm more than happy to answer them. But I don't give unsolicited advice because many times the truth doesn't look good, especially when it comes to home acquisition. So I shut up, let people, do what they do, wish them the best, pray that everything works out. But yeah, that's how I operate. I don't really compartmentalize the two. I can't, because it's just the way I live my life, period. I do my best to practice what I preach. And like I said, if and people have come to me, very few, but people will come to me when they have questions. But I definitely give off the vibe, like, if you ask me or don't ask me nothing and expect me to not tell you the truth. So yeah, that's kind of how I move.
Okay, well, you know what? This is going to be a personal question for me, because I also, I'm not a pastor, I'm not in ministry, but I do love helping people. And so, but I am one of those guys that will give completely unsolicited advice. And I've been working on it, because I quickly realized that it does not work at all. And so do you have any tips for someone? Not me, of course. But do you have any tips for someone who has this burning passion in their heart to help people build generational wealth and help people, because you see people complaining all the time. That's all I see on social media, complaining, gas is too high, rent's too high, all these problems that are problems, they're legitimate problems and they need to be solved. And I can help them, but they're not necessarily asking for it. So like, any tips, man? For anybody out there, not me, of course, but
I would say just continue to do what you're gifted to do. Like within your lane, just do your thing. And I just think that as you operate within your giftings, operate within your callings, people will come. Those who need you will come, right? What I've learned from giving unsolicited advice is the same thing that you have. It usually doesn't work.
It wasn't me,
man. It actually turned to animosity, right? Because now, you told this person, hey, this isn't a good deal. They just wanted a home at the time. You told them it was a good deal. Now they're going through a home buyer's remorse. And now every time they see a problem in their home, they think of you, right? So yeah, just like I'm on here, being honest with you, You're asking me questions. I'm not, seeking you out, but you're asking me questions. I just learned, I think a great philosopher said, stay in your lane. I think the great philosopher, his name was LeVar Ball. Yeah,
Shout out to
but
LeVar.
yeah. Yeah, so I stay in my lane, and just know that the people who need me will come to me. When they come to me, I'm honest, of course gentle too. You're honest and gentle, but at the end of the day, the truth is the truth regarding the situation, regarding what your budget's looking like, regarding what your income is looking like, and you just want to communicate the truth about the situation. So yeah.
Yeah, I think a very important part, which I also learned relatively quickly, is like the truth is nice. I think the truth is always the best thing, but I also think that delivery is even more important than the truth. And since we're pulling out quotes, a quote from Charlemagne the God on the Breakfast Club is like, is honesty without empathy, or it's something along the lines of honesty without empathy is brutality. Meaning,
Ooh, that's
if
good.
you tell someone the truth, if it is too harsh, it is not going to come across as helpful. And
That's
so,
really good.
yeah, I quickly learned that it's
Honesty
like,
without empathy is brutality.
I don't think the word is empathy. I'm gonna look it up real quick, but it's
Well,
like,
if it's not, it's about to be.
That's good. Yeah.
yeah, it's along the lines of like honesty without kindness is brutality. Empathy, sympathy, things like that. But you guys get the gist. And I've very quickly realized that the phrase that at least we coined in the black community is like tough love. Sometimes it's not received as that, and so still working on it. But I'm really glad that you pointed it out. It's like, even if it's the truth, sometimes you got to put the medicine in the candy. It has to be easy to digest in order for it to help someone. And so planting that seed, like we might talk about on here, or you guys even talk about on your Instagram page, you just plant that one little seed, and then they might come back and say, hey, what did you mean by this? Or, hey, you said this one time. Do you mind elaborating? And I think that that's a great way to spark curiosity, because then it's their idea. You know what I mean? It's their idea.
Our Instagram is full of unsolicited advice.
Yeah.
We're gonna go ahead and like wrap it up, get into the final questions. And it's the same. I asked you these questions on the last episode. I want to just see if things have changed. So, Darius, we'll start with you. Like, what are some of your long-term goals for the next 5 to 10 years? And what does the finish line look like for both of you?
My long-term goal in 5 years, plant a church, revitalize a church.
What does that mean?
Planting means actually starting up a church. Either starting up a church, or revitalize mean going to a church that is pretty much a dead church, and just giving my energy and efforts to that, and by the grace of God, bringing it back to life, and bringing new converts, as well as conforming myself and others more so to the image of Christ. That would be one goal. 2, kid investors that we would I'd like to potentially sell.
Ooh, we can talk about that one.
Sell for. I like to sell.
Don't give a number. Don't give a number.
Yeah, don't give a number. Don't.
Okay. Yeah, I would like to potentially sell that. We'll get it to the point where we can sell it for at least 8 figures. And then on the real estate side, commercial, just at least 2 to 3 commercial properties where we own them, and we of course making money through those. So yeah, that would be the 3 long-term objectives: spiritual, plant a church or revitalize a church, kid investors, let's sell that joker, and real estate, get a few commercial properties.
So mine would be, my kids are becoming school age, and so I'm kind of vacillating between homeschool or whatnot. So one of my long-term goals, first of foremost, is I really want to get into commercial. I would really like help us meet our, I call it the get free number, get free. Because what people don't realize, entrepreneurship is still a job. You're just still working for yourself.
Yeah.
So we want to generate enough passive income where if we didn't do anything else for the rest of our life, working for ourselves or other, we would be good. So commercial makes the most sense for us. So getting that, 1 or 2 apartment buildings. With that, one of my goals is to hire, like have an employee, like a nanny, like an in-home person, to be with our kids. I would definitely primarily still be doing everything, but the areas where I'm not strong in, especially like teaching wise, having someone I know that can pick up like certain subjects. Yeah, I'm not a fan of how the school system is going right now, public, private, whatever. So I like the idea of having that. That's a goal.
Mm-hmm.
Kidvestors, I do want to make it a sellable and scalable company. I'm not sure of whether I would want to sell it, because I would definitely want to know who I'm selling it to. I wouldn't sell it to anybody who I don't think would do right by the company for a dollar amount. But I will say I would entertain it if the price was right.
I know you would.
Just being honest. I would entertain it if the price is right. So we are definitely being strategic on how we're setting up the company. But I'm still not sold on selling it. I don't know if it's like a pride issue or something, or the idea of like just selling your baby.
Yeah. Well, if we make it, I mean,
because some people don't do right. They acquire it and then it's like trash.
Listen, if you pay me, I'll shut up. So.
You guys can always go start another one, right?
This is true. So. I don't know. I won't be this is the last startup. I think too, if we sold it, the only caveat is we would still keep the rights to the name. That would have to be part of it. We get a board seat, keep the rights to the name. So they could actually have a company and then lease the naming rights from us.
That's a smart way of doing it. But Courtney, I really appreciate you kind of admitting that like you're not a perfect person in all areas, and you have weaknesses just like Darius, just like myself. Mm-hmm. And you're not afraid to delegate those weaknesses to someone who's better at it than you. So if you're not the best one-on-one teacher, I do not have patience and I'm bad at English. So my wife is going to be the English teacher and I'm going to be the math teacher. I love numbers, right. But being able to delegate your weaknesses, I think is a super duper important thing that most people need to learn how to do, and everybody's still learning how to do it. But I appreciate you admitting that you have weaknesses and you're not afraid to let someone else do it, man. Because guys, I really appreciate you coming on the podcast for the second time. I'm not going to ask you the final questions because I already got them from you guys on episode 20, which will be down in the show notes, guys, where you guys can listen to them talk all about this 8-figure business, Kidvestors, that Darius wants to sell for 8 figures. But yeah, I really appreciate you guys coming on tonight and sharing your story, sharing your tips for getting into real estate using other people's money. I think that you guys dropped a lot of impressive nuggets that people are really going to be able to look at and act upon, like building rapport and going to overpriced seminars to try and network and things along those lines. So
we appreciate you for having us.
Thank you. We enjoy the questions, very thoughtful questions.
Yeah, man, you guys are awesome, and you're always welcome back. To as soon as y'all sell Kidvestors, I'm sending a message saying, "Hey, come on, let's talk about it."
We'll happily talk about it.
It'll be so funny if it happens. We can timestamp it. What's today? July 7th.
Like, July 8th. Yep.
July 8th. Look, I'm behind. Look at that.
But all right, guys. Like I said, I really appreciate you guys coming on. You're always welcome back. And I truly, truly hope for the best. I have nothing but high expectations for you guys and to continue. But before we go, wow, I almost forgot. Where can people find out more about you guys?
Pettway Estates, Pettway Estates, plural, like real estate. We're on all platforms: TikTok, Instagram, Twitter, what else? Facebook, Pinterest. Pettwaystates.com. If you want to work with us, if you are in Louisville, Kentucky, Indiana region, and you want to buy, sell a house, or you need your house renovated, Pettwayestates.com. And if you want to learn, if you want to do what we do, you can go to thepetways.com or flippingatozz.com.
And of course, guys, I'm going to have all of those, both of those websites, all three of those websites, and all of their social media handles linked down in the show notes below, where you guys can click it and get over to get in contact with those guys. But yeah, I really appreciate you guys coming on and having this conversation. It's been very, very inspirational. And again, I love to see Black people doing what I want to be doing. It gives me so much inspiration and so much, I love it.
Thank you.
Well,
Thank
we
you.
love that you love it, and we appreciate you so much.
No problem.
You guys have a blessed rest of your night, guys.
You too. Thank you.
Man, oh man, I really hope that you guys enjoyed the conversation I had with Darius and Courtney. I mean, we went over so many different topics when it comes from invisible lines, knowing like, hey, look, don't buy a house across those train tracks. Every city has invisible lines. So it's very, very important when you're picking your market to invest in, you need to learn where those invisible lines are. You need to talk to the locals and say, hey, what side of town would you never live in? What side of town would they have to pay you to live in? And they're going to tell you, oh yeah, I don't go on that road, or I don't go on that road, or whatever the case is. So knowing these invisible lines, we talk about gentrification, guys. Gentrification is just a scary word people try to use to scare us, intimidate us, and make us feel like victims. Gentrification is not a bad thing. We can gentrify our own neighborhoods and we can stay in them. And how do you do that? You listen to podcasts like this. That's how you do it. The goal of gentrification is not to just kick everybody out of their house. It's to raise all of the home values in the area. Do not be afraid. Do not sell. Take advantage of this opportunity when somebody's bringing it to you. When we talk about the Burr strategy, we talk about private money a lot. Man, oh man, like these guys are so experienced and they're always dropping free knowledge. So if you guys are not following them on Instagram, you need to go follow them. They're dropping free knowledge every single day on how to get started in real estate. They literally make this content for you guys. If you have kids, you need to send them over to KidVestors. I'm going to have that link down in the show notes because you guys need to be following these guys and absorbing all of their content because you are going to become a millionaire behind it. I have absolutely no negative thought in my mind that these guys are not going to go places. They're not going to teach hundreds, maybe even thousands of people how to follow in their footsteps. So if you're just listening to this podcast, go absorb their content. Go absorb the KidVestors content. Go absorb it all and take action. They're going to give you every single step it takes, and it's free. It's charitable. Pastor Darius, man, he's doing this for you guys. So you need to take advantage of it and don't be a loser and listen to this and do nothing. That is not going to help. I really hope you guys find inspiration in this. I really hope you guys find a lot of good knowledge in this, and hopefully it's what it takes for you to get started. But without further ado, guys, I'm your host, James Bowman, and always remember, you're only as secure as your ability to perform. So spend your life accumulating assets that can perform for you. Later, guys.